Hello and welcome to the look ahead for Tuesday, the 11th of March with me, Fiona Sincota, Senior Market Analyst at City Index. So overnight, we're going to be watching out for data from Japan, GDP figures and household spending. In the US session, we will also have JOLTS job openings and later tomorrow the oil API, oil inventories. However, I think more thematically speaking, we'll be keeping a close eye on what's going on in the US as those recession fears are building. We had some comments from President Trump over the weekend, which really fueled those downturn worries. Let's not forget that last week we had the Atlanta Fed GDP now reading coming up at negative 2.4% contraction in Q1 of 2026. So there's some big concerns going on as far as the outlook for the US economy is concerned, expectations of a downturn, and that's on the back of these flip-flopping trade tariff policies from President Trump, which has done very little to help confidence both for businesses and for investors and households as well. So that's created a very much a risk-off environment that we have been seeing. Now, just having a look here, this is the USD Japanese yen trade and chart, and what we're seeing there, as we can see, is that strengthening of the yen, and we've seen the US dollar falling. Now the US dollar is fallen to around a 5-month low versus its major peers on those concerns that the US could be heading for a downturn given Trump's policies. Trump doesn't seem to be too concerned, refusing to rule out the prospect of a recession. But as I said, we've also got data overnight from Japan. We've got GDP figures, which are expected to confirm 2.8% annualized Q4 growth. That's 0.7% quarter on quarter. Also, household spending is going to be very much in focus, and that's expected to increase to 3.6%, up from 2.7%. Now, this comes at a time where the Bank of Japan have hiked interest rates, and they're currently at a 17-year high, and the market believes they will be hiking interest rates again this year. Potentially Q3 seems to be consensus. However, it's also worth keeping in mind that if we do get stronger than expected household spending, stronger than expected growth, this is going to add to those inflationary expectations and could fuel Bank of Japan rate hike bets, boosting the yen further. That would add to yen strength, which is already finding strength from those safe haven flows as the market sells out of risk assets. So as far as this chart is concerned, let's have a look. We are in this downward channel that we've been trading in since the 158.90 level that we saw early January. We're trading down at a 5-month low or a 5-month high for the yen, but a low for this pair, just testing the lower bound of that falling channel. And we've got the 50 SMA crossing below the 100 SMA, series of lower lows and lower highs. So, just the only thing to watch out for is the RSI supports further downside whilst it remains out of oversold territory. If we get into oversold territory, then we could see a period of consolidation, or at least, or indeed a little bit of a move higher. As far as levels to be watching, if we do break out of this channel, though, on the downside, 145 is the level that we're going to be watching on the downside. That's the round number. Just as far as any recovery is concerned, got this level here, which is the 148.60, which was the low, that we saw in December last year. If we can get a rise above that, it's also the midline of the falling channel, but we'd really need to see a move above the 150.70 level to create a higher high and change the structure of this chart and expose the 200 SMA at the 152.41 level. Other one we're just going to have a quick look at here is obviously the US Nasdaq, fallen really sharply. Look at that bearish engulfing candle. I mean, it's well into correction territory, over 10% down from its record high that was reached in mid-February, fallen very sharply in reaction to concerns over the outlook for the US economy, taking out several key support levels, including the 200 SMA there at 20,300, and also this level here, which is the 20,000. mark, round number, taking out this now, which is the October low, which is around that sort of 19,600 level. Looking to the downside, what's next on the downside? This one here, 19,000 round number, but we are very much in oversold territory. So, there could potentially, again, be a little bit of a steadying out if we, as at least some consolidation following this very, very sharp sell-off that we're looking at right now. Just as far as levels are concerned on the upside, any recovery would really, first of all, need to rise above 20,000 and the 200 SMA there at 20,300 in order to create any sort of stability in that, in the price action and a more neutral stance. Then let's just also have a look at Euro US dollar, because Euro US dollar had a pretty phenomenal week last week. It saw its strongest weekly performance since 2009, rose over 4.4%, pushed above, we saw it rally from down here, the 103.70 level, all the way up to a high of 108.88, so just below the 109 handle. Now, this has been a sort of several factors that have helped the Euro US dollar rise. Obviously, we've got the concept of potential political stability in Germany, the idea of massive defense spending and infrastructure spending again in Germany as they look to reforms to their physical debt, their debt break, and also just generally broader spending across the Eurozone. Also hopes that potentially the slowdown that we have seen in the Eurozone and Germany could be coming to an end. We saw Centix investor sentiment data come out today, and it was much stronger than expected. Germany was a notable outperformer, so it does feel that there could be some turning tides as far as that's concerned, and that's obviously helped the euro charge higher. But again, we are in overbought territory. So, a lot of these charts that we're looking at look overextended. So I'm just wondering, whether that sell-off in the dollar is a little bit overdone, the sell-off in US stocks a little bit overdone whilst we get some consolidation in. There isn't any major data from the Eurozone, which is due tomorrow. However, Euro USD will be trading as well, listening to the US narrative. JOLTS jobs openings, they're expected to come in a little bit higher than they were last month. They dropped very sharply last month, which fueled some concerns to 7.6 million. They're expected to come in at 7.75 million, so a little bit higher, but still weaker. But if we do get weaker than expected data, that's going to add to these recession fears. The market's going to be looking really hard now for hard data showing that those recession fears are sort of to be expected because the data is coming in weaker. So far, it's been confidence, business confidence, forward-looking figures. So if we do start to see these figures, the slowdown sort of appear in hard data, then I think we could find that hits sentiment further. Anyway, that is everything from me. I hope that you've liked what you've seen, and if you've got any further questions, then please do reach out. We'll see you tomorrow. Hey. Okay. Hang on.